In this video, traders, I want to talk about scaling into winning trades. Stay tuned. Hey guys, well, welcome to you. Thank you so much for joining me. Okay, so scaling into winning trades. So this is distinctly different from scaling into losers. Well, obviously, but we can get confused and talk about scaling in. So scaling into losers is, some people say, oh, it's a bad strategy and all this type of stuff. But if you do it strategically, it's fine. I'm not talking about in this video, but scaling into losers is basically when the price is going against you and you're adding to that position. So another topic, another video. This is really scaling into trades that are going in your favor. So if you're long, the price is going higher, you're adding more to the position. The advantage of this is you're in your biggest size on your winning trades and you're trying to maximize the most you can from this. So I think this is something that you really should only start to explore once you've got some consistency, you've got a strategy that's effective, you've got other things dialed in, you haven't got any discipline issues. It's something to look at kind of further down the line of how to incrementally make more from your very best ideas. But if you're in that situation where you do have a strategy, you've kind of got your discipline dialed in, you know your weak spots, you know your strengths, you know the best ideas, then this is something to kind of look at. So first thing is to really identify the best conditions. This is not for every single trade. Personally, I like to grade my trades. It's very personal, it's up to you. But if you've got a kind of A+ setup that has a tendency to potentially have a big move, so not an A+ mean reversion setup, an A+ kind of momentum ignition, range expansion, volatility expansion, trend trading types trade that can run on if the conditions are right, then you can start to look at how do I add more to that deal? How do I get more size on? Because I think we get into this trap as traders. We go, I want to trade more size, and so we kind of look at the unit risk we're taking per trade and go, well, if I double that, or if I add 50% to that, that's gonna help. And of course it will. We want to try to incrementally increase the size, but another less kind of focused on angle of attack, if you like, is this incremental increase in size as the position goes your way. So identifying the best conditions. You've got to have a couple of trades that are just grade A+, they've got all the attributes and you know how to identify those. You go, right, okay, I'm going to scale into those trades. Now, the downside, of course, of scaling in is you're buying, if you could we're going to assume for the long side just for this video, you're buying at a worse price, and so your average price is getting worse technically. So goes from 50 to 60, if you're buying a 50 and buying a 60, your average is now 55, assuming you buy equal amounts rather than 50. So you have to take that into account. So let's kind of look at an example here. Just, my usual whiteboard stuff, guys. Rough examples. Imagine if you bought, at point A here, a little pullback, trend, double bottom, fine, you buy at point A, and you want to add to the position. So part of the strategy should be, under what circumstances will I add? So that's the filter of, like, this is a grade A setup. I think it's got room to breathe. It's got potential to really run on. And then you go, okay, so when will I buy? And this isn't, I will just buy blindly, because that's going to ruin the whole trade. Potentially if you're buying blindly at highs and it pulls back, you're in a position where, oh, I bought exactly the same amount, it's come back, or I bought more, and you just ruin it. You can ruin this in an instant. So it's a very, very kind of, you've got to finesse this and be careful about where you add, how much size you add, all this type of stuff. Now, I definitely recommend, if you're looking to kind of deploy this tactic, to start small. So in other words, let's say you had, your position A was 10 units of risk, or whatever, or 10, let's say 10 lots, or 10 pound a point, or whatever it may be. The next trade, whilst you're kind of just getting involved and expanding this strategy, it should be a tenth of that. So you go, okay, I'm only going to have 1 unit. Say you're doing, let's stick to contracts, make it easy. You're doing 10 contracts, Dow, NASDAQ, SPOO, whatever. You then go, I'll do one more on the ad, and I'll kind of learn the craft. And so you're never going to get caught out massively because you're only adding 10% of the position size. Further down the line, you might want to adjust that and say, hey, I'll add this another 10 and another 10, or I might just go 5, or I might add 2. You might change the structure, because that, just moving that bar has a big impact, right? So point A is where you buy your kind of main clip. 10 lots, for example. Now you go, okay, I'm going to add on bull flags, I'm going to add on little range break fakes to the downside, whatever your strategy may be. And obviously this is where it comes into knowing your strategy and your entries and your triggers, etc., before deploying this tactic. But let's say, for example, you go, okay, I'll buy on a bull flag, and so Point B might be where you add to the position. And as I say, starting small, you might do 10 here, and then you might say, right, as I'm kind of learning this skill, I'm just going to add 1 there. But for now, just to get a feel for it. So, this is identify the best conditions. Talks about that, starting small. Right. Next thing is to, I think, personal preference. The way that I like to look at it is to, well, most of the time, is to treat each ad as a fresh trade. So what does that mean? So normally you go, right, I'm long at A, whatever price that is, I'm long at B, and my average price is going to be, if it was 10 lots and 10 lots, it's going to be somewhere there, isn't it, right? If it's 10 and 1, it's still going to be slightly worse price than A, but it's going to be weighted, obviously, because it's 10th position size, but it adjusts your position. And so one way of looking at it is to say, what's the net position or price? Where am I long from and how much size? 11 contracts from here or 20 contracts from here, the midpoint, and then treating that as a fresh trade and saying, right, this is my new trade. My average entry's moved up, but I've doubled my size. And that's okay to a certain extent, but I think that each ad should stand on its own 2 feet and have its own merit. In other words, if you're adding on a bull flag here, then the stop should be for that ad as a separate trade. So if you're adding 1 lot there, then your stop is probably going to be under that flag low, for example. And I'm using real rough examples here. So you're not out of the whole trade, but if you've added here, it comes down and pings you out. It takes you out of that trade. It gives you minus 500 bucks or whatever you're trading, but this is still running because this trade is still valid, right? The trouble you've got, I think, is that when you're adding to the trade blindly, or not blindly, but let's say you're adding a structured way, your stop then becomes a little bit more like, oh, well, actually my average might be here, but my stop really should be down here. That's way too much size, and the risk is it kind of skews what's going on. And so I think treating each ad as a separate individual trade helps loads, and it can be a little bit more aggressive. Again, it's personal preference, but I find that then you can be a bit more aggressive and say, hey, that's a flag, a good flag, momentum ignition type trade. It stands on its own 2 feet in its own right. I would take that if I wasn't already long. Where would my stop be? It's dipped under, it's popped back up. Let's put it below that pin bar. I'm happy to accept the risk. Yes, I am. And then as that goes up, I might then go, right, now I've got the double size position and I'm into fresh highs. Do I want to then look at it as if it's a broad and it's out of the danger zone of the ad? It's started to push up. Do I now want to look at it as one trade? And that's something to consider as it sort of gets up from the takeoff position into the cruise. I like to think of a trade going from takeoff to cruise to landing being the exit. As we're sort of in that cruise position, I might then bundle the position, work out where my average is, and then manage the whole position as one. But that initial ad to me has got to kind of do what I want it to do and not get stopped out. Now you might say, okay, I'm going to leave the individual stops in, but at some point you're going to look at the whole aggregate and say, hey, I've added 2 or 3 times to this trade. This is how I'm going to operate it. Another thing, I didn't put it on here, but one thing that springs to mind, and I know that some traders like to on how to operate like that, but that could be another thing you do. You say, fine, my broader swing core, if you like, and it could be day trade, but it's a longer time frame, is A, and I'm going to scalp from B. So you kind of say, I'm still going to position long, and I'm going to scalp B, and I'm going to buy a flag and kind of come out on that first sort of impulse, and treat that as an individual trade. So you're kind of stacking up little wins as you go along, another 800 bucks or something, another 800 bucks, and you've got this bigger trade coming that's kind of unrealized, a couple of grand or something, and you're like, okay, fine, that's how I'm going to operate it. So there's different ways to play it, but just be careful about which dial you adjust, because if you adjust the size dial, that can really skew the whole trade and ruin the whole trade. If you adjust the entry price dial, which it's got to stand on its own 2 feet, I think, but again, that can skew things. So this is more of an advanced strategy, I feel. I also feel that you've got to look at all the different variables, how it could positively impact the trade, how it could negatively impact the trade. Because what you don't want to do is be taking, you're doing very well, you feel confident, you've got some structure, all this kind of stuff is working, and then you add this into the mix and it just ruins everything, just breaks, and you're like, because this can really, really, really just ruin a good strategy. You've got a good entry, you're running the trade right, maybe you can get a 5R trade, 6R, 7, 10R potentially. Adding this in, trying to get more, can ruin the trade and make it into a kind of losing game, if you like. So something to think about, but it's well worth spending some time on, because on those high quality setups and the right trade that has got potential to run, if you are adding, then you're almost adding with unrealized P&L, and you can almost play the game of, right, I'm prepared to risk 5 times as much on this trade as it goes in my favor, rather than 5 times as much straight off the bat and doing a 50 lot here. Okay, I'll add I'll start off with 20, then I'll maybe add 10, another 10, another 10, another 10. Let it rotate down, let it find a pattern, and obviously trading within the rhythm and the structure of the market you're in. Scaling into winning trades, guys. I hope you enjoyed it. If you did, thumbs up is much appreciated. Take care. See you next one. Bye bye.